Hello everyone, my name is Luca and I will be informing you about financial literacy. More specifically about these 4 topics: investments, insurance, credit, and budgeting. In my opinion, these are the most important things in learning about your financial future and what advantages and disadvantages there are around these topics. You are watching Zito in the Banco, and I bring to you the 4 most important things in finance. Investments, whether that be gold, an RESP, or that GameStop stock you made thousands on. Investments are assets acquired or invested in to build wealth and save money from the hard-earned income or appreciation. Investments are primarily made to obtain an additional source of income or gain profit from the investments over a specific period of time. So let's say you are working at a part-time job making $600 a month and you don't have many expenses, so you decide to invest some of your leftover money. You invest your money into buying gold each month, and eventually after a year, with the gold price going up and you accumulating so much of the coin, you sell it and you make a big profit. This is how a young person such as yourself can start out making small investments, then after making lots of profit, you decide to invest in more expensive and valuable things, overall earning huge money the older you get. Investments, however, aren't always going to be making a profit from buying and selling. A major investment could be a house, a car, or putting money into a retirement plan. All it is a way you can use your money to have a reward one day in the future. There are, however, lucky investments that you can make. For instance, the GME stock, the GameStop stock I mentioned earlier. If you bought 100 shares of GME right before COVID-19 hit in February 2020, it was $3.60 a share. And if you sold it when it was at its highest price of $483 a share, you could have made nearly $50,000. That's nearly a $12,000 return of investment. Or another example of a lucky investment could be paying $10 for a lottery ticket and winning a jackpot of $50 million. However, these odds are extremely unlikely. To conclude on investments, they don't always have to be big. All an investment is something you put your money into for a return of something profitable in the future. Start small and work your way up and everything will go A-okay. So the second thing I'm going to talk about is insurance. And as we all know, insurance is the biggest scam of the century. No, I'm only just kidding. Sort of. Anyways, moving swiftly onwards, insurance has plenty of benefits to the general public and can really help in certain scenarios. There are many types of insurance, but the main ones I'm going to be focusing on and you guys should be paying attention to are car, health and dental, and life insurance policies. Insurance is a means of protection from financial loss. It is a form of risk management primarily used to hedge against the risk of a contingent or uncertain loss. As many of you, I assume, drive, whether that be your parents' cars or your own, you should have some sort of information around car insurance and what it provides in the case of a collision. Trust me, I know from experience, which is not so really a good thing, but it's whatever, right? Car insurance protects you from the financial liability of damage you cause to another person's car or an injury you cause to other people with your car. Car insurance can also protect you from damage to your own car, including damage from collisions, theft, vandalism, and bad weather. Insurance policies are something you will pay monthly, and the price will vary due to many things such as your age, where you live, what kind of car you drive, what your driving record is, and so on. Those dentures of yours always require good cleaning, and your overall body health is most important. However, it does get pretty expensive. There are a number of health and dental insurance plans to choose from, but there are some great ones that offer core health, prescription drugs, dental, and health benefits. The monthly payment of this kind of insurance is quite expensive, so you would want to hold off on this until you are making serious money, or if your job offers benefits, that would be ideal. Lastly, a dead giveaway, life insurance. That was my failed attempt of making death funny. But anyways, with life insurance, again, you will pay a monthly fee, and the primary purpose of life insurance is to provide a financial benefit to dependents upon the premature death of an insured person. The policy will pay a specified amount depending on how much the insured pays annually. For young people such as yourselves, the payout won't be too significant in terms of how much your dependents get. However, there is still some financial benefits. So moving on, we got credit. When you think of credit, what comes to your mind? Most of you will think of the card. However, credit isn't just about the card. Credit is the trust which allows someone to provide money or resources to another person wherein that person does not reimburse that someone immediately, but promises either to repay or return those resources at a later date. Essentially, that's all a credit card is it's borrowing money from the bank, and they hope that you pay them back at a later date. Just don't let the Italians find out you're borrowing any money. Who knows what they'll do to you. But this is why we have credit scores. As most of you are getting at that age now where credit cards will become a reality, you need to know how to keep a good credit score in order for your rates to be low. These rates are things such as interest rates. A good credit score is a numerical expression based on a level analysis of a person's credit. This is to represent how trustworthy an individual is while having a credit card. A credit score is primarily based on a credit report, information typically sourced from credit bureaus such as TransUnion. Things that will affect your credibility is missing debt payments on the card and maxing it out. So don't go to the mall with your buddies and max out your card at the Gucci store and then not pay your debt on time. Be sure to pay debts right away, even right after you make a purchase. Also, you want to limit the number of credit applications or credit checks you do. Banks can see everything, so be careful. Having a good credit at a young age and keeping it good as you grow older is such an important thing, because when you put money down on a home, you won't be paying a ridiculous amount. This goes for your mortgage payments as well. With good credit, you will be able to make these payments easier and at a lower interest rate. To basically sum up credit, just be sure to be on the good side of the bank. Like I said before about the Italians, think of the bank as the mafia. If you don't pay them back, they'll come after you and your family. However, just a little less gruesome. So, the fourth and final, most important thing in finance is budgeting. Ah yes, budgeting. Something most of us young people have no idea how to do. Basically, budgeting is essentially a way to manage your money and expenses over a period of time by creating a budget. It allows you to determine in advance whether you will have enough money to do the things you need to do or what you would like to do. Budgeting is simply balancing your expenses with your income. Not only are you planning out how much you can afford, but also how much you want to save. As you guys grow older, you will start to grasp the importance of money and the value of it. This means knowing how to spend and what to spend your money on while having some left over for the things that aren't so important. There are a number of ways to budget successfully. However, the most common used method in budgeting is the 50-20-30 method. The idea of it is to put 50% of your total income to your needs, 20% of your total income to your savings, and 30% on your wants. The 50-20-30 method is very simple to maintain, which is one of the reasons why it's the most common used and the best budgeting methods for young people like yourselves. The needs consist of things like your car, food, gas, other transportation, etc. The list can be so long depending on the person. The needs are basically the things you cannot live without. Savings consists of one's debt payments, emergency funds, vacation trip money, etc. The wants are exactly that. This is pretty much everything else that is not entirely essential. Shoes, clothing, TV cable, new electronics, eating out, etc. This method of budgeting is good, however, there are some cons to it. Overspending can become a common occurrence with this budgeting method because you're only budgeting 3 categories and not taking everything into account. It can be easy to spend a little more on something like food and then forget when you are low on gas, and then you end up going a little over budget. To not have this happen, you could either overestimate or have some wiggle room in each of your budgets. That way you can freely move your budgeted wants money to the needs category if you overspend. Like your parents told you when you were younger, don't spend it all on one place, or be sure to save. So, to wrap up this video, I want all of you watching to click off this video having retained some knowledge of these 4 things that I just talked about. Feel free to share this video with all of your friends to educate them on the importance of finance while cracking a good laugh and learning a thing or two. This has been Zito in the Banco, and I will catch you guys next time.